Good morning, everyone. This is Daily Trading Analysis with the weekly recap for another week of tensions in terms of trade. The prevailing sentiment is negative, largely due to the escalating trade tensions and concerns about a potential economic slowdown impacting global growth and inflation. This is further compounded by uncertainty surrounding the Federal Reserve's policy decisions. There are, however, some small glimmers of hope within the US economy. We saw positive signals coming from recent retail sales, which came largely higher than expected. US retail sales year over year came in at 4.6%, way higher than the previous 3.11, indicating strong consumer spending growth. Also, the core retail sales month over month came in also slightly higher at 0.5 from the 0.3%. And look at this, the overall month over month jumped straight to 1.4% from 0.2. We were expecting exactly that. So we met the strong forecast and showed a substantial increase from the previous month. However, we got the New York Fed 1-year inflation expectations that came in higher than expected, from the previous 3.13, now 3.58. So this is an increase in short-term inflation expectations, indicating persistent inflationary concerns. So this is why we have to be so on top of everything, because one balances the other. We are seeing strong growth and strong spending, but at the same time, we are seeing inflation expectations coming higher. So even though the consumer is hesitant to continue spending, we are seeing some data which is encouraging. On the corporate front, we have some more earnings. Bank of America's CEO has also noted continued consumer spending, hinting at resilience in the US economy. There are also potential positive developments on the trade front, with the White House indicating that more than 15 trade deals are actively being considered. However, these positive indicators are overshadowed by significant headwinds. Reports continue to highlight the escalating trade tensions between the US and various countries, raising concerns about reduced global growth and increased inflation. Several organizations, including the WTO and the Fitch Ratings, have already cut their global growth forecast, citing the impact of these trade wars. Furthermore, there are concerns about a potential slowdown in US economic growth itself, influenced by the impact of tariffs and inflation and employment. Adding to the negative outlook are scenarios presented by the Bank of Canada, which include the potential for a protracted global trade war leading to a significant recession and rising inflation. So, turning now to the US corporate earnings, as I was saying, we are seeing a mixed bag, but mostly positive. Citigroup, Goldman Sachs, Johnson & Johnson, Bank of America reported strong earnings, exceeding expectations for both EPS and revenue. We are seeing Citigroup revenue positive 21.6 billion. Now, in terms of Goldman Sachs, 14 EPS versus the 11 EPS. That's huge. Then Bank of America also topping estimates, and Abbott topping estimates in both EPS and revenue. So overall, positive earnings, positive consumer spending, but look at what Trump is doing. 35 is my final sentiment analysis, which is pretty bearish. So we are seeing that in the charts. When we actually look at the weekly, again, we are seeing a contraction of 2.27. We are still pretty volatile. As you can see, on the daily, we are seeing a small week of 4 days, just been a little bit to the downside. There's no gap down here, so I actually don't know what the market is going to do. I actually don't even want that. I want to see the price action. And one of the charts that I would like to review with you today, it's the 1 hour. The 1 hour has, for me, in my opinion, has some bullishness under it. We have the push on the 90 days push that last week on Wednesday. We push higher. We push higher, and now we've been consolidating. We have the consequent encroachment in the 1 hour being touched 1, 2, and 3 times. We have sell side liquidity and buy side liquidity and a gap in here. So what I'm watching is basically another tap, maybe to trap some sellers down here into a reclaim of the gap and the BSL. And this depends on earnings. We are seeing, in terms of volume, in terms of market internals, this is the ES. Look at this. This volume, I think, is big players betting on good earnings. Probably the last good earnings of the year. So we are seeing advanced decliners on the ES. We are not seeing the same in the Qs. In the Qs, we are seeing less of a push in terms of volume. We had also Wednesday and Thursday pretty bad in terms of volume, but I'm seeing some bulls, I'm seeing some buying. So this 1 hour is one of my key time frames for next week. We are also seeing VIX being destroyed on the daily. We can see the spike on the trade war, and then we are now below 30, 29.65, which is more or less calm. It's not the below 20, but I think a lot of the volatility just came down a lot, and we are seeing another pocket of hope. But look at the dollar. The dollar is being destroyed. We are now below 2 years low, which is this low down here. We have this strong push in 2022, and we are now below 100. From the top, the dollar lost 10%. This is crazy. Then, in terms of yields are all the large December contracts, October contracts. We are seeing every yield going higher. So this is why Fed Powell basically said that they don't want to act, they don't want to lower rates because they are seeing slow growth, and also they are seeing higher short-term inflation that maybe will be persistent. So what we are seeing here, it's the US economy, the dollar being held accountable of all the tariffs. But let me reinforce the message again. The 1 hour in the NQ is good. But don't get me wrong, we have this zone which is pretty dangerous. This zone needs to hold. If we are to go through that, this becomes liquidity, and then we are probably going to see again below 17,000 and probably 16,500. So again, what I'm watching is this gap. What I'm watching is this sell side liquidity, and I would like really a hand of liquidity, and then to attack the first target, and then the second target would be this buy side liquidity. If I see exactly this manipulation on the sell side, I would probably invest long term. because on the daily, we are seeing strong potential for this gap and for that until the 22,000s and all-time highs, there's 20% of return, possible return. So in the lowest, it might be this. We might see some kind of push towards this high, which is already 11%. So we can play the dip. I can see some people buying. I'm not super confident because there's no fair value gap here, but the 1 hour looks good. That's the only thing. But after a long weekend, Monday, be really careful. Let's look for some gap up, let's look for some bullish price action, and let's look for this manipulation move. And let's also wait for earnings, because I think those earnings will be the perfect catalyst for this to happen. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because these weekly recaps, I always do it on Sundays to review all the week in terms of fundamental, technical analysis, earnings, and whatnot. So if you want to support the channel, give it a like, subscribe, give me your comments down below. If you are new, welcome. If you are coming back to this channel, thank you for the support. I really enjoy. We have also the 200 moving average being crossed here. So another thing that I just noticed. But anyway, remember that this long weekend is for you also. Take a rest, do some stuff outside of trading, and just be outside in the world, because next week is going to be, I think it's going to give us a lot of opportunities. So remember that trading, it's based on discipline, patience, and risk management. Without those skills, you will be smoked. So have a nice weekend, stay safe, and see you on Monday.